Monday, January 27th, 9:52 in the morning, California time, market analysis. And I am Stan Ehrlich. We have a very active, great conversation material to talk about today. I warned you about on Friday. So I always start out with the stock market indexes and go to futures and then sometimes other topics. So today, stock market index E-mini, we were getting overbought Wednesday, Thursday, Friday last week. I talked to you about a double top potential coming up to previous highs and overbought conditions, prime situation for the market to start to slip. And I had no idea that it was going to crash on Monday morning this morning, way over 10 points at the low. Currently down 118 and 3/4, give or take a little bit on the E-mini, translates into approximately 11 points lower for the SPY. We see it bouncing almost halfway back up, and it was halfway back up and still down a huge amount since last night. Now, I understand NVIDIA. I know apparently why, but I'm not a fundamentalist, and I don't care. This stuff happens under the conditions I outlined before it happened on Friday. It's just a big, great, fantastic example of what I was looking for. Faster, bigger than expected, but what I was expecting. Now, the low today was back down to the support line that I thought might take a week or a little more to get to. And it is not yet in oversold condition. So I do think there's a good chance in the next week or two, and it may even be more considering we now have a possible double top and we have a breakaway gap to the downside for the E-mini. When's the last time you saw a gap? And it's only on the weekends, really. And that's for the weekend that it gaps because it's closed for a couple of days on the average. So, wow. Breakaway gap to the downside, double top formation. In order for the double top to start to work, you need to start closing below 58.07-ish, below 58.09 exactly. On a close below that number, we have a double top and a downside breakout with a minimum downside objective of, and I'm going to take about the average price between the two highs, that's good enough, to the lowest low for the formation and measured down straight down. We are supposed to come down to 54.50. That's right. As low as it was last August. Well, almost, not quite. If the double top does work for its minimum downside objective. And I'm going to leave this on the chart until it's proven not to be legitimate or the breakout occurs and we're on our way down, hopefully, no guarantees in this business, to 54.50. The 5-minute chart on the E-mini shows the gap down this morning, no significant bounce whatsoever, no significant, and it just kept coming farther and faster and bigger and more were sold until finally capitulation. So it made new lows for the last 8 days, the day after it was making new highs for the trend. That is saying a lot. That's 1 day ago, 2, 3, 4, 5, 6, 7, and 8 days ago it was lower. So 7 days, sorry. New lows for 7.5 this morning. At what was it, about 3 a.m. California, 2:45 California time. Spider, huge gap down. And I'm showing you 1 full year of history here. This could be a very important, or it could turn out to be something like we had last July through August. It double topped out, but it never broke out to the downside. Only came halfway down, which is about where we're at today's lows. And then the bull market continued, but you got to start to see some strength coming in here. I don't think that's going to continue from here, to be honest with you at this point. So if it starts holding really well and starts getting new lows and then closing stronger, or a reversal, then I'm going to start talking bullish. But right now, This could be, I think it is the beginning of a move down that again could get fairly serious, and I wasn't expecting that. My downside objective on the SPY is give or take a little bit. This is not super accurate, but pretty accurate. Down to this major support area at 542. It'll take, obviously, a month or two, maybe more. And I have no idea what kind of fundamentals are going to cause it to have happen. Oops, I used the word fundamental. But, we'll see. And the 5-minute chart on the spider, new low for 1, 2, 3, 4, 5 days. Today is a new low for the previous 5 days, 1 week, all in one fell swoop when the spider was, and it was, in new historic high ground. So let's look at Friday closely. What was wrong with Friday? Well, first of all, we got overbought on the daily data chart, and there it is, both on Thursday and Friday, down here, lower right-hand corner. So that's a warning. But on Friday, after getting overbought around the high of the day, coming back to a little bit of support, the old historical highs, and bouncing off of that, but it did not make a new high. Instead, it dribbled back down to the low of the day, and around 10 a.m. California time on Friday last week, it started to make new lows for the session and closed significantly lower for the day. Not huge, not a big reversal or anything, but I've said 100,000 billion times, if a market makes a new high for an extended time period and does not stay above the previous highs, that's a warning it could flip-flop. It did, big time this time. So if you see new historical highs or new highs for a substantial amount of time, I'm talking maybe a month or two or more, it it's supposed to stay above the previous highs. And if it doesn't, watch out. Next, QQQ, close to making new highs. You could call it a double top. Not yet finished, of course. The downside objective on this pattern, and I'll take the average of the two highs approximately and measure down to the lowest low, and that's it right there. Grab the little measuring stick and drop it down to measure a 463 3/4 downside objective for this possible double top. But I also want to show you something. I missed it in the spider. Look what happened. We closed a gap almost exactly at today's lows. I thought that was going to take a week or two. We left a gigantic gap from the low of Friday to the high of today. Huge. That implies the market sooner or later is going to go back up and close that gap and a gap. So that's a 3-day, which is not in the textbooks at all, but the body parts are there. So you could say a 3-day island gapped up, and when it gapped down across the same prices, creating an island, 3-day island. Usually they're 1 day only. Fairly rarely 2. 3, no such pattern really, but they're so rare that nobody talks about them. I probably have seen 10 or 15 or so in my 53 years. Now, next chart, Qs. Huge gap down. Also left a 3-day island. It did have an outside down day, bearish engulfing on Friday. There's your sell signal. But it never got overbought, therefore it didn't turn red. And that's not a sell signal if it's not red. That's a sell signal for ER signals. It's red, it's on top of a rally, it is overbought and a bearish engulfing. That's red. It's overbought and a bearish engulfing. That's red. Same answer, same reasons. It's built to detect those types of market circumstances. By the way, my bearish engulfing has a very slight twist on Steve Nissen's variation on the Japanese candlestick bearish engulfing. Mine's very, very similar, but there is a minor change. Also, my custom RSI, ER is significantly different than Wells Wilder's original, and I learned RSI from Wells himself in the late 70s and 80s. Well, I was part of the international lecture circuit for 25 years or so. What a great time. I got to travel like crazy, meet a lot of great people all over the damn world. Dubai, Beijing, Singapore, you name it. Been there, done it. Next, QQQ. This is just a 5-minute data. You can see the 3-day island in more detail. And by itself, it was a little tiny double top over a 3-day period. And here we are coming down and closing the only gap that the QQQ had, except for the one that just occurred a few days ago. So, oh my God, gaps are getting closed, support's getting tested, and we've just come down pretty much too fast, too quick, in my opinion. But I think we might even have new lows for the day today, and then go sideways a little bit, and then go down some more. Let's see what happens. Next, NASDAQ daily data chart. We gap down in the NASDAQ again on futures contracts that are open 23 hours a day, and then forex, which is really never closed except for on the weekends. You don't get gaps very often, very rare. So this was over the weekend and it gapped down. So, because of a Chinese IE, program that apparently is super cheap, is instantaneously so popular, the market got scared of that kind of thing and went down. Again, I'm not a fundamentalist, so take that with a ton of salt. But it came down to support. That's my expertise. Bounced halfway back up. Now, I think there's a good chance we could make a new low yet today, but that's maybe 60-40 chance on the probability of making a new low side. Next, we've got the detail for the NASDAQ 5-minute chart. Next, we got the YM. It's a different animal. No double top. Simply got overbought. Tested a previous bull trend line, the bottom of an upward slanting channel, which is textbook. I said that probably both Thursday and Friday. And we came down sharply today, but no gap. And we're back up to higher on the day right now, as a matter of fact. Wow. What a differentiation from the YM to the NASDAQ and the E-mini. Very different. And the Russell is somewhat similar, and we'll get to that in a moment. We almost made a new high for the move in the YM. Very different. Now here's the Russell. Major resistance stopped it, and a minor level inside the major. And we've now made a new low for 4 days. Not 5, 6, 7, just 4. And nowhere near the low of 5 days ago. So it just hasn't collapsed as much like the YM. And it bounced back almost to the same resistance area. It's holding up quite a bit better. But I can't change my opinion. It's just we won't be going down as fast or as much, I don't think, in the YM and the Russell. And the NASDAQ, well, that's a 5-minute Russell, kind of approaching the low of the session. I think it's going to make new lows like the others. And now bonds. Breakout. We are currently trading well above the neckline, right there, of a relatively small to medium size 1 month head and shoulder bottom. My favorite pattern. I have seen probably over 1,000 of these or more and watched them either succeed or fail. Why they did one or the other, what to look for, how to recognize it, et cetera, et cetera, et cetera, over my half century plus. So that's the first shoulder low. And we have December 26th. Now notice that today is January 26th, no, 27, almost exactly 1 month later. The arch mark, or the little V I put here, was for tomorrow to be the exact lowest day. Instead, it was Thursday, only 2 days early. That's not too much. It was at the right price levels. That's fine. The timing was almost dead perfect. That's fine. And we got a buy signal at the bottom, a green ER buy signal on the damn low day, which I pointed out to you the day it happened. I know it. And I got to tell you, ladies and gentlemen, the next day, ER3 bought the opening at the low tick at 111.30, and that date was January 15th. You saw it predicted and happen right here. Now we're at new high ground completely and have formed the last shoulder on a head and shoulder bottom. And today, breaking out to the upside. Plus, we never got stopped out. We came so close on Thursday. I told you, I think it was 1 tick. Maybe also on Friday from stopping me out with a stop at this level. And we changed the kicker to go up faster a day or two before that low occurred. Go watch and listen to my previous recordings. Don't believe it. Well, if you don't, just go listen to our recordings. So, bullish breakout. Now the upside objective is starting in 117 and a half or higher. I think it's going to take 2 or 3 weeks, maybe a little longer. Bull markets climb a little slower than bear markets go down. Bull markets climb a wall of worry. Bear markets panic on their way down, come down much faster. So on our way up in bonds, which I love. Now that's not the big story. The big story is it's a 2-year, it's 2. There we go. Double bottom formation with a bullish engulfing ER SPY signal on exactly both lows. Don't try that at home alone. Anyway, you can't get better. You can't get more of a bullseye on daily data charts than to be a buyer with an automated trading system on both lows of a 2-year. Now, it remains to be seen whether the 2-year double bottom is going to work, but we're on our way. So far, so good. So once we get up to 17 and a half, if that's what's going to happen, and I think it is, we got to clear the resistance levels and obviously start closing way up above 127 3/4. Then you have a gigantic upside objective. I think I had 150 marked on this chart before and erased it because that was supposed to be the shoulder here about a month or two ago in October. Yeah, and it didn't pan out. But now I can come up with this double bottom idea, and here is the objective. I'll take the average of the two lows and not go to the lowest low, which will make the objective more bullish, or the highest low, which will make the objective a little bit less bullish. But I'll take the average, which is right about there, and measure from that price level straight up to the highest high between the two lows. That's your measurement for the double bottom. And I'll just make that perfectly vertical. Now, from the highest high between the two lows of the double bottom, you measure up to, 145.30, call it 146. That is my official double bottom if it happens. Upside objective long term. Notes. Head and shoulder bottom and notes. Breaking out as we speak. Minimum upside objective 111 and a couple of ticks. Same long-term story, but a better formation. The low that we made in October of 23, 2 years ago, October of 24, well, a year and a half, call it, all right, plenty big, is just recently a tiny bit lower than October of 23. Yeah, call it a year and a third. It's still very big. That's not the, 2-year, 1.25, not that big a deal. So, big upside objective here if the double bottom works. Great, very nice upside objective at 111 if the 10-year notes get to its minimum upside objective. And this all depends upon it closing above the neckline. Right now, it's just barely above it, but I think it'll hang on here and make more gains tomorrow. A little more strength would be great for an official, an obvious breakout. Right now, it's a little bit borderline, but not too much. It's above the line. Let's see where it goes. And it was only a day or two, just like bonds, earlier than my expectation for the low. The price level is almost dramatically the same. The low on this day, the low of the shoulder, was 108.06. The low in the first shoulder was 108.065, a half a tick. What the hell can I say? Timing symmetry, almost dead on perfect. Price level, a half a tick difference, as perfect as you're almost ever going to get. And boom, 2 days later, breakout. Wow. Great example of a head and shoulder in many respects. I just didn't get a buy signal at the bottom. It was oversold substantially, and I did talk about it probably turning back up, and here we are. Next. Energies, crude oil. dropping back into the previous pennant formation, out of overbought conditions, not yet oversold. It's going to come down some more. Same commentary on heating oil. Listen to Friday. Next commentary on natural gas. I'm wondering if that is actually correct. I have a feeling that that is an error. Let me pass on this for the moment. I do think it's down on the day, but there was a rollover from one contract month to another on this chart. And okay, I'll do this real quick. It'll only take about 10 seconds. I'm reloading the historical data on natural gas, the March futures contract being plotted at the moment as of today. Prior to that, it was the February, but we're almost in February, 1 week to go. And there you go. Okay, this is updated, except for all my markings. I need to realign those things. But now it's just a little lower in the day. And the head and shoulder bottom is probably, let me lower the neckline down to where it should be. Okay, no problems. Yeah, it's just dipping a little bit. For tomorrow's recording, I'll have all these in place. Next, we have upside objectives in the ballpark of 29.88 up to about 31.16. This has gotten overbought on Friday for the first time in a while, quite a while. So a little bit of a dip, no surprise, and it's dipping. I don't think it's going to go below the line at 26.95, and it goes down slightly every day. It's a bear trend line. But we did have a bull trend. Then we had a pennant formation. We broke out of it, and that's usually bullish. It did go up for over a week and get close to the previous highs. So that's a perfect spot, just like the indexes actually, for it to pull back a little bit. But this is so far normal, a little bit, not dramatically crazy fast like the S&P and the other indexes. So a little bit lower and then up some more, a lot more. Silver didn't break below, what was that again? Gold. Yeah, that's gold. So this is silver, didn't break above the bear trend line, didn't break out of its pennant formation. 3 times it touched the bear trend line last week, and now a new low for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 3 weeks about. Today, all of a sudden, resistance, trend line, previous highs, next day, new low for 3 weeks. Wow, pretty big break. Now, where is it going to go? I think back down to about 29.5 to 29. And maybe at the bottom of the wedge or downward slanting pennant, and that would be 28.30 something. Next chart. Platinum, a bit of a different story here, different animal. Large support area, still holding many, many times ever since approximately the summer of 23. Getting close to 2 years. Major touches 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. There's something like 15 to 20 different times it's bottomed out in this zone. A lot. It looks a lot like the Russell index, but it isn't. It's the platinum. So it should drop down a little bit more, not too much, and at any time now start to turn around and go back up again. Why not? Next, copper. We got a sell signal on the top of the market. Thursday of last week, we took a profit. Friday, it jumped up a heck of a lot more, but it didn't close strong. It closed around unchanged. And we have a new low for the move down. Now, I'm, crying over spilt milk that I'm not still short, but I'm not crying over spilt milk that I followed my disciplines and it turned out to be a profitable trade and it was 100% automated. Gotta like it. I could have loosened up my stop and then missed getting stopped out on the rally on Friday, but then I would have a losing trade or at least a break-even trade after a nice profit, and that could have simply gotten worse. And then I would have looked back in time and said, hey, I had a profit and I ended up taking a loss. Not smart. Next chart. I'm looking for a little lower. Soybean oil, meal, corn, and wheat, the grain complex in general. It all could come down a little bit more. I don't want really meal or wheat to come down much more. So if I'm right about soybean meal and wheat stabilizing and starting to work back up, Then probably bean oil, soybeans, and corn will all three do something similar soon. And I'm going to make that statement, and I think that could come true. So how much more down on beans? Well, to be honest with you, anywhere from today's lows, which is on a support line I drew a long time ago, to maybe even down to 979 or 980. I kind of doubt 980. But unfortunately, it's a fairly broad area between today's low and down there. So somewhere in there, certainly the trend line. You want to keep your eye on the downward slanting previous bear trend line, which was broken classically, overbought, topped out, came down to the trend line. Beautiful. Made a new high on your way up, but another correction has started. So now where is it going to stop and turn back up to another new high? By the way, if we make another new high, which I think we're going to do soon, a week or two, maybe sooner, we then will have a double bottom and an upside objective of 1184.5, right about there, in a resistance area and hopefully getting overbought at the time. We'll see what happens. Soybean oil topped out in resistance, overbought condition, turned around, came back to some support. Bounced off of it a little bit so far. The test of support was the middle of last week, Thursday rather. Yeah, Wednesday also, Thursday and Friday. And we're still a little lower on the day, but near the high of the day so far of the session. And it could get a little stronger. But I'm not going to get any reversal out of it. We didn't get oversold at all. All we got down to is a very neutral 50. So, yeah, I'm in favor of it going up. You do have the makings here of a head and shoulder bottom. I do have the neckline which slants upward already drawn in, and the upside objective if this whole thing works. And it's not a very good example of a head and shoulder bottom. You've seen just this morning some good ones. 6120-ish would be my upside objective approximately. You can't tell except for the final day that it breaks the neckline. Then you put your measuring stick on that day. But I'm guessing, sometime soon. And every day it goes up just a little tiny bit. So yeah, a 61 and a half, maybe a little bit higher. Now, I thought this was going to be, that's why I've got the marker there, the shoulder low. The timing was almost to the exact day perfect. The price level was almost exactly perfect relative to the timing and the price level of the first shoulder over here in May. The bottom is always the lowest low for a head and shoulder bottom. And that was August 16th. And if you count the number of days from there to there, you get there. Timing is just perfect. Price level is just perfect. It did start to move its way up just perfect, but it failed. Now we have a buy signal at the low, give or take a tick, almost at the low, give or take a bit, a few days, and we missed the first shoulder. But now it went sideways already, broke into new high ground a lot, and has made already new highs for a couple of months. This little dip in the last week or so is okay. Maybe it's bottoming out at support and will make a new high real soon. I think that's possible. Soybean meal. You can see we're at support, but we're not oversold. So maybe it'll dip down a little bit more. Now, this has a very rare triple bottom over a very long period of time. That's June of 23. This is March-ish, March-April of 24. This is December and January of 24 and 5. All of them are reasonably close together considering the length of time between each low. That's a triple bottom, but you've got a huge way up to go in order to break out. I'll be paying attention to other things like the bear trend line, support and resistance levels, both above and below, to see if this triple bottom is going to work correctly. I'm trying to turn immediately friendly soon, but I don't have the right combination yet to claim it's going to turn up right away. It's only at support just barely today and could dribble off a little bit more for a short period of time and sometime this week turn up. Okay, corn. Oh my God, corn has already gotten up to my minimum upside objective on the head and shoulder bottom. This was a beauty. Past tense, worked told you about it throughout the development of the formation before the breakout. That's what I do all the time. My job is to tell you what's going to happen and what did happen and what it means to the future because of what it did happen. Technical analysis is all about learning what the market tends to repeat again and again and again. History repeats itself, and historical rhythms and price action is part of that, or cycles, and those are my expertise. So I just want to measure this again. From the shoulder low to the lowest low was exactly that amount of time. And if I take that from the lowest low and measure it to the right, we were only a few days a little late for the last shoulder low. The price level was a little lower than the first shoulder. That's acceptable. It's not the perfect pattern. They don't come perfect. They come like human beings. All of them a little bit different. And it worked. What can I say? It's done. Past tense. What now? A little bit more of a dip, a new high ground I'm expecting. Let me get rid of that measuring stick. Next, wheat. Double bottom formation, looking for the market to stop going down. This is the wheat of all the grains. This is the closest to failing to cooperate with my expectations or opinions. It could make a new low pretty darn soon. It's not close to oversold. If something's going to start failing from my bullish stories, wheat's going to do it first, it looks like. Otherwise, it's about to turn up. And that's what I'm crossing my fingers for. That's about all I got to use to grab onto is support levels are being tested, and it should, looks like it may turn up. Okay, cattle. Well, this is going to cause me to be a vegetarian. This damn thing was a flat top right triangle. It broke out a few weeks ago and just hasn't quit. We're now at an RSI of 84. Very high. One or two times a year, markets get to this level. Maybe once a year or less, they get to 90. We're not at 90. And if we were, I'd be screaming bloody murder. We're going to top out within hours or a day or two. And maybe very close in price, let alone time. That's not quite the case, but it's sure as heck similar. So we're not as high as I'm going to scream bloody murder, but very high. There's no way I would want to be a buyer of cattle at these levels, given the price levels that it's moving up. And by the way, if you were unfortunately short, buying gets out of a short, and that's buying, and I wouldn't do it. I would consider suffering maybe a little bit more. I'm sorry to say that because I'm sorry that you're short, but I wouldn't cover shorts under these topping out classic major overbought conditions. Hogs. Minor double bottom, 3 weeks in size, in a support area. Second low wasn't quite oversold. The first one was plenty oversold, around 15. That's equivalent to 85. And it did turn up. It tested the support again, and it's now obviously turning up. We have a minor upside breakout, a little higher than today's high. It'll be a new high for about a month. It'll have a minimum upside objective of approximately 95, 65-ish, and it'll be testing the highest high for the trend. So I am expecting new highs if this continues to rally. Now, this is unfortunately a little bit of a surprise because you see I got a head and shoulder markings here. There's the first shoulder, there's the head, there's the second and last single shoulder, normal. We broke a trend line in the process of the formation developing, came back up to the trend line, and then we came down, creating the pivot point for the neckline of the top formation and broke it below it classically on December 30th. Came down some more, got significantly oversold in a support area and bounced right back toward the neckline, which is a form of a trend line. Just has a very specific name for very specific reasons. And stopped. Now we have a second test, not normal. So closing above the old neckline could cause me to turn bullish immediately, but I can't yet. I have to go with the head and shoulder top idea. It's just an unusual second test of the neckline. So selling short here should offer a very low risk trade. My buy stops would be in the ballpark of 91 or a little bit higher, 91, 10, 20, 30, to give you a broad idea. It's not an official recommendation. I used to have a stockbroker's license, commodity broker's license, but I retired, quote unquote, a decade or more ago, more like 15, 20, and dropped my government licenses. It doesn't mean I don't know what I know. I just don't have those licenses. But now that I don't have an official stockbroker or commodity broker's license or hedge fund manager license, which I did, I can pretty much say what I want because I'm just a normal citizen. But I still, think it's the right thing to do is to hedge my statements when needed and be a little bit more forceful, so to speak, when I think I need to. So here, you got a very close situation. It's going to top out, period, right away. And if I'm wrong, the risk for the short side from price levels we're at were WHERE at the high of the day were a very low risk. So they're already gone down a little bit to the current quote. So although it's not slipped much, the risk is obviously a little bit more at the current tick. Next, we have the one stock I've been following for 2 full months every day now. It's getting dragged down with the stock market indexes and the new news about artificial intelligence. AI, I meant AI, damn it, AI, sorry about that. And inappropriately so, in my opinion. But it's not damaging anything. No new lows, just a little bit of a dip, maybe a little bit more than a little, but not too terrible. And it did leave a small gap behind. Gaps are almost always closed. They act like a black hole in space. They tend to suck the price action back into the gap area sooner or later, and it's usually sooner. I'll give it a week, maybe 2 at the most. May even be only a day or 2. Then, if it keeps on going up, I'm good. I'm long-term bullish. I don't see it making lower lows than 80. Huge 2-year support. Huge 2-year bottom formation. I'm not going to go into the details, but it looks like a head and shoulder bottom. And that would be the first shoulder. It's a double bottom by itself around October 22. And then you got, guess what? October 23. And then you got, guess what? August, not quite October, of 24. There was a low September 11th and the beginning of a sharp rally in October. But, I like October lows. You've seen me pick off some outstanding ones in the last couple of years. Three years. Yeah, last year, not so great. The year before that, unbelievable. And the year before that, an all-time record. Incredible. That's the only word I can think of for the October low in 2022, I believe. Yeah, 2022, pretty sure. Okay, next. We're back to the E-mini, middle of the range. Seeing a little bit more weakness, starting to break down just a tiny bit here on the 5-minute chart. Very, very minor new lows for a few hours. But again, I think it may make new lows for the whole session before the end of the day. You have a great day. Sorry this is so long, but I had a lot to say. Have a great day and profitable trading to you.